This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets for Tuesday and Wednesday, and also going over the SPY technical analysis for September 24th, 2025. And with that said, let's go ahead and jump straight into the data. I apologize, the top of this is cut off a little bit. But for Tuesday, today, we had the global manufacturing PMI come in, and it came in a little lower. So for me, that's telling me that producer managers are seeing a little bit of weakness. If this is above 50, that's showing strength. So with it slowly coming down each and every time the PMI comes out, that's showing a downward trend. So downward trending PMI is not good for the economy. President Trump spoke at a NATO summit earlier. Um, Powell spoke, and I'm going to talk about it just a little bit, but I want to talk about the 2-year auction first. So there has been a lot of, I don't know, I just want to say discussion, contention, thoughts, opinions about where the yields and everything are going. And with this 2-year auction today, that tells us pretty much exactly where the yields are going, and they're going down. Now, this is slower than what we were expecting. If we were expecting, I don't know, the labor market and everything to really go out of line, but this is showing that long end inflation isn't a very high risk. Okay, this is a 2-year period. This is showing that over a 2-year period, they're expecting the rates to be at this or lower. Okay. Now, obviously, this can go up or down. This isn't just locking in at this time, but the people that bought these yields bought the yields for a 2-year period based around, the yield today. And with the yield pulling down, that's showing that Treasury buyers are still strong. Now, I haven't checked the actual results. I didn't see what the banks had to pick up on their end or anything, but I know that last month alone, the Treasury auctions pretty much across the board have been very heavy in terms of buyers just picking up pretty much every single note that they can. The banks have been hardly having to buy back the notes that other customers did not pick up. So that's telling you that people are wanting these treasuries. They're wanting to lock in the risk-free yield, and that's important. This treasury auction today, I feel like, was very important. If inflation was going up, the treasury market slash the bond market are the first people that will know about it. They have to base their profit margins on the smallest percentages. Um, if they thought inflation was going up, the 2-year auction today would have been a higher yield, meaning that the sellers, the Fed, would have had to incentivize buyers more to pick up these treasuries. Now, that's not the case. Buyers are still picking these up, and you wouldn't do this if treasuries were going to be devalued. And what that means is the rates go up. Um, Remember, it's not the Fed that dictates the rates, it's the overall market. Um, the Fed just kind of has to react one way or the other and implement their tools into the banking system. And their tools is just reducing or increasing the federal funds rate slash interest rate. Now, with that said, Powell spoke today, and I didn't watch the whole speech, but I did read the transcripts and went over those in detail. But the primary thing that he said about the market right now, or about the economy, is that the economy has a potential to see that inflation pick up, but he also thinks that the price increase was transitory. Just we need to see more data to ensure that it was. And because the Fed has a dual mandate, they have to ensure maximum employment with forgot the other one right now, price stability or something like that. With that said, with the just potential risk of inflation increasing, the Fed has to be in a stance to where they can pause slash hike rates. Now, granted, I don't think they're gonna hike rates. That's not what I'm saying at all. But they're in a posture to do so, and the reason why the Fed is being very hesitant on basically anything is that while there is the very significant risk to the labor market deteriorating and basically the yields running to zero, there's also just that risk of the upside inflation. And so, how do you balance a book when you have to lower the interest rate, but also the other side of the mandate says to basically hold the rate or increase it to, because that's how you reduce inflation. That's how you stop inflation is you increase the interest rates. Um, so the Fed is trying to fight two battles here, and they really only have one or two sets of tools, and that's being able to raise or lower the interest rate, and that's being able to buy or sell securities. Okay. Now, the Fed has still been selling securities, and what that does is that puts pressure on the top end, so the inflation end. And I do think that that's probably the only reason why they have not stopped their QT process, the quantitative tightening process, because of that potential risk. And you have to remember, these people are in charge of the biggest bank in the world, besides, some of these private banks and everything. They have to price in the risk of both the downside and the upside in totality. So while one of our narratives or thesis might sound very great on pen and paper, the Fed has to be in a position and posture to really be able to tackle any serious issue. So Powell does not think that the interest rates will continue going up. He did say that he believes that they're transitory. He just has to make sure. Okay. Um, that's basically the only reason why they're not doing very heavy cuts right now. Now, he also said that the labor market is a very significant concern. Okay, and while last week gave us a little cooler results, the overall trend has been pretty brutal for the labor market. Companies are just not hiring right now. Unemployment is going up. Jobless claims are going up. And that trend has just been continuing month over month over month for about a year and a half, 2 years now. So I do believe that the Fed will be cutting pretty hard soon. Probably about 1 to 2 months. I'd say the narrative will really shift from, hey, we have to be cautious of that transitory inflation to, okay, that's no longer a concern. We're just concerned about the labor market. Let's just cut the interest rates down very quickly. So I think that's kind of the overall goal and the plan for the Fed right now. And Powell also made a very interesting comment about the actual markets. He said that the equity market right now is very overvalued. Now, that doesn't mean a whole lot, but it means a whole lot in terms of who it comes from. Um, Powell saying that is that's something to be a little cautious of. Okay. Granted, I've been telling everybody to be very cautious of the market potentially selling off, but um, it's a little different hearing it from someone from the Fed. Anyway, enough of that spiel. Now for tomorrow, we have the new home sales data at 10 a.m. And this is going to be fairly important, but it's not going to be very important for the market, I believe. I think it's going to be more important for the economy. Now, I've been talking about housing and everything for a while now, and basically the new home sales have been going up and up and up. Um, the previously owned homes have been, trying to sell, and nobody has been really buying them too much. So, seeing this data, we're expecting the new home sales essentially to really, come down again, where we're expecting it to have another poor month. And that's kind of what everybody in the housing business that I know anyway has been saying about it, other than a few locations, a few different cities, but across the board, for the most part, housing and everything has been very, very difficult. Now, we also have the 5-year Treasury auction tomorrow. It should very, very likely follow in regard with the 2-year note auction. Very slight decrease, very likely across the board. So tomorrow, not a whole lot of data, but just remember, we did have Micron earnings tonight, and I do believe they did a double beat. I'm not entirely sure about that. I know that semiconductors were up a little bit, so could that potentially, run the market a little bit tomorrow? Maybe. We've seen it happen in the past. I don't really expect it. Micron's after hours are only up 0.41%, so basically barely nothing. The earnings was just a very slight bump. So I don't really expect that to carry the market or anything tomorrow. But with that said, let's go ahead and jump to the technical analysis. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's ensure the daily time frame is turned on. And let's look at our moving averages and Bollinger Bands. Now, today played out almost exactly how I expected it. And not saying that from like an egotistical point of view, I'm saying that from there's this very dangerous area between the upper Bollinger and the 5 mile. So before I get into that, let's actually just discuss the closing price and the moving averages and everything. So the market closed at 663.21. The open was actually at 666.72. So it was a fairly red day. Even though by bearish standards it wasn't really a selling type of day at all. So the market again closed at 663.21. The 5 mile is at 662.31. And that will be pulling up very, very, very slightly tomorrow. I would say barely anything. It's basically going to be 662.50-ish, maybe a little less, maybe a little more. So just be anticipating it to be around that 663 or 662.50. With that said, upper bounds 664.50, and then the lower bounds is 660.50. Now, with that said, that means that we technically did have a 5 mile test today, with the 5 mile being at that 662 range. We pulled down all the way to the, what was it? The low of the day was 661.98. So we did test the upper side of the 5 mile. Okay, and swapping back to the daily time frame. With that upper side of the 5 mile test done, if the market wants to buy up from here and head to the upper Bollinger, they can. Now, the upper Bollinger is at 668.51. That will be opening up to the 670, very, very likely within the next few days if we have any sort of buying. Now, with that said, we've only kind of tested the upper bounds of the 5 mile. We have not tested the lower bounds, which is something we generally see out of a full 5 mile test. And lately, they've been trying to do these 5 mile tests where they'll test part of the 5 mile. Like, for example, they'll test the upper bounds one day and then they'll test the lower bounds the next day. Then they'll move from there. So I do expect the lower bounds of the 5 mile to be tested if we're not going to have some just massive bounce up into the upper Bollinger. Now, if we have the 5 mile tested fully, that means again it unlocks both the 20 mile and the upper Bollinger. So the 20 mile is currently at 652. It's actually at 651.90, but we're going to call it 652. Tomorrow it will pull up to that range on open. So the downside right now potentially is very, quite large. If we start having some selling towards that range, which again, that's very possible. The selling has been very quick throughout this rally. So if we have a very quick sell down to that 20 mile range to test it, it really wouldn't surprise me at this point. Now, with that said, the market, essentially has two ranges to test. It has the upper Bollinger, or not to test, but to take. Either it's going to take that upper Bollinger range, or it's going to start heading down and taking the 20 mile. So right now we're kind of not in between fully, as the 5 mile is closer to the upper Bollinger, but we're starting to get really between these 2 points. And the real in-between point right now is the 10 mile. So the 10 mile is currently at 659.06. That should be pretty much right at that same level come open tomorrow. It'll be up very slightly. If we start selling, look for the market to take to that price. And if we start, really, really selling, then we can work on that 20 mile range. But, that's kind of the gist of where we should go from here. Now, going to the hourly chart. Hold on, I just want to... This is the 4-hour chart. You can follow along on the hourly. It looks a lot better to show you on the 4-hour chart though, but I would follow along on the hourly. Now, structurally, we do have, potentially a very, very bearish structure forming here. And it would be acceptable for this bearish structure to form. And the reason why is because we have this orange buying channel. And this orange buying channel has been extremely, extremely strong since the very start of this rally. Okay, so we are very, very close to the top of that buying channel. Now, kind of as a rule of thumb, for channels, I know I haven't discussed channel trading too much in my videos, but I've actually made my own version of channel trading that many people, including myself, have used to, make a ton of money. So I am very, very comfortable with it. And how channel trading works is once you correctly identify the channel, essentially the price is going to go from the top to the bottom, top to the bottom, top to the bottom. And that's exactly how channels trade. I don't know if this is just by a set algorithm, but these channels will literally stick to the T unless the trend is starting to break. For example, if we have a selling trend, and then we break this level, then that would be breaking this buying channel, and then we can start drawing a selling channel, and then very likely we'd go up and down in that selling channel until that selling channel is broken with a new buying channel and rinse and repeat. So that's how I used to trade quite a bit, and it's still a very, very successful way to do it. But with that said, we are very close to the top of this channel. We are starting to see a bear structure, but remember I did talk about this in last night's video that this bear structure can potentially head right back up and turn into a cup and handle and head to the upper Bollinger. Remember I said that all they have to do is test that 5-mile range, and from that 5-mile range, it should create a cup if we see buying back up to that 667.34. Now, if we have another solid consolidation day slash selling day tomorrow, then very likely it's going to start working on this right shoulder. And we do have to be very, very careful because this right shoulder technically can pull up a little bit. Now, the reason why I only drew it a little bit is because that can look very much like a bullish cup. So just be careful if you're bullish here. Even though again, you should be using your 5-mile range to set up positions, both calls and puts. Because from here, either we're going to head to the upper Bollinger, head to this upper channel, or we're going to head to the 20-mile and start heading, down this channel. With this bearish structure potentially starting to happen, we can head down very quickly and complete this inverse cup. And from this inverse cup, technically we have a larger head and shoulders right here. And if this formed a right shoulder in there, then we can have a selling channel. So that's kind of what I'm looking for tomorrow, is whether we bounce off the 5-mile upward or if we see the 5-mile tested and start heading to the downside towards that 20-mile. It shouldn't be too difficult of a day. Let me just look over the hourly, see if I see anything. Same thing on the hourly. You had a very small cup and handle breakout here. From that breakout, that's how you had that new all-time high. They formed a head out of the breakout, and from that head, it does look like they are trying to work on a shoulder. So we'll see, everybody. I'm extremely tired. I know I always say that, but I've been dealing with this fatigue issue. With that said, I'm going to end the video here. I always appreciate everybody taking the time out of the day to listen to me, ramble along with everything. But with that said, I hope you have a great day tomorrow and trade safe, and I'll talk to you in the next video. Take care.